If you had followed a simple equal weight strategy with my top 5 stock picks from last year, you wouldn't just be matching the market, you would be crushing it. While the S&P 500 had a decent run, my top 5 stocks for 2025 portfolio outperformed the benchmark by 20%. We saw massive wins in beaten down sectors like China and fintech, proving that value investing is very much alive. But that was last year. The question is, where is the value hiding now? In today's video, I'm breaking down exactly how those picks perform, the math behind the returns, and most importantly, I'm revealing my top 5 value stocks for 2026. These are the companies I believe every investor needs to research right now. If you want to find the best opportunities in the market, welcome to MoneyJourney. Make sure you subscribe so you don't miss our next deep dive. Let's get into the numbers. First, let's look at the scorecard. I always believe in transparency, showing the winners and the losers. My 2025 stock picks was a mix of contrarian bets and high quality, and it paid off. The biggest driver was StoneCo, STNE, up a massive 81%. We bought it when it was priced for bankruptcy at $8 and it recovered to $20 per share as earnings caught up, but at the moment it's trading close to $15. But then we had Alibaba, Baba stock, up 75%. This was the deep value rebound. Sentiment on China finally shifted and their cloud and AI growth pushed the stock from $85 all the way up to $190. But at the moment we are seeing Baba trading at $155. Then third pick was Google. Was our stabilizer, up 60.4%. Despite all the regulatory noise, it performed like a true magnificent 7 leader it is. But not everything worked. Vichy Properties was essentially dead money, down 1% for the year, counting dividends. High interest rates lingered longer than we hoped, putting a lid on the price, though the dividends helped slightly. And the portfolio anchor was Novo Nordisk, down 41.5%. This was a classic fallen angel situation. Valuation compressing and heavy competition in the weight loss sector hammered the stocks. However, this is the magic of portfolio construction. Because of our heavy exposure to the recovering contrarian picks like Alibaba and StoneCo, the winners far outpaced the losers. If you had invested $10,000 at the start of the year, putting $2,000 into each of these 5 stocks, your portfolio would now be worth roughly $13,480. If you had put that same $10,000 into the S&P 500, you would have about $11,430. That's an outperformance, an alpha of over $2,000 or 20.5% above the market index. We won by betting on the current turnarounds while holding big tech. Now let's see if we can do it again for 2026. Now, let's get into my top 5 value stocks for 2026. As always, this is based on business quality, fundamentals and valuation. This is not financial advice, just my opinion and research. In number 1 we have Amazon. First up, this is a giant that has been a little bit of a laggard in 2025 compared to its peers. Amazon is one of my favorite business in the large cap world. Now, I'll be honest, this is not cheap in the traditional sense, mostly because they haven't fully optimized for profits yet. They have high value capex, so they are investing all their earnings into their business. But that could be very good. But look at the engine under the hood. AWS growth is accelerated again. This is actually the only stock on this list I don't own right now, but it is high on my watch list. If we see a dip in the next month, I'll be adding it to my portfolio. Keep your eyes on this one. My number 2 pick is JD.com. We had a great run with Alibaba last year, and while Chinese stocks recover in general, JD has been left behind. investors are worried about their heavy investment in the food delivery business and fears that it won't yield good returns. But here is the reality. JD is not going anywhere. It's a logistics powerhouse. They have plenty of cash on the balance sheet, and while the retail is low margin sector, JD is still very profitable. In terms of valuation, it is incredibly cheap relative to its revenue and cash flows. The risk reward here looks very attractive for a patient investor. Pick number 3, Novo Nordisk. Yes, I am doubling down. Novo was my worst performer in 2025, but that is exactly why I like it for 2026. The healthcare sector has been lagging and Novo has been hammered by sentiment, but fundamentally, this is still an exceptional business. The GLP-1 weight loss trend isn't vanishing, the market just got ahead of itself last year. Now, that the valuation has compressed significantly, I believe the worst is behind us. This is now one of the best risk-reward situations in the healthcare sector. I'm sticking with the fallen angels. Pick number 4, InMode, ENMD stock. Let's move to a smaller cap pick. And for this one, I'm just going to use pure math. InMode has a market cap of around 900 million, but they have 530 million in cash and no debt. That means the actual value you are paying for the operating business is less than 400 million. Now, look at their free cash flow. Over the last 4 years, they have generated between 100 and 150 million annually, and they are still growing. Basically, you are buying this entire business for roughly 2.5 years of its own free cash flow. That is absurdly cheap. They have 85 gross margin and they are smart. They've already bought back over 16% of their outstanding shares just in 2025. There are risks, of course, but at this price, it feels like a no-brainer. And my last pick, Mondelez. Finally, I want some defense. The defensive sector has been lagging recently, and while you could look at Unilever and Procter & Gamble that we have been talking about in the last few videos in this channel, I think Mondelez is the winner here. They own iconic brands like Oreo and Cadbury, brands with incredible consumer loyalty. Even in tough times, people buy snacks. They have good solid margins, great management and good growth prospect for a defensive stock. Plus the cherry on top, that is 3.5% dividend yield. It provides safety and income while we wait for the market to rotate back into defensives. So there you have it. My playbook for 2026 is a mix of big tech recovery with Amazon, deep value in China with JD, a healthcare rebound with Novo Nordisk and InMode, and a defensive fortress with Mondelez. I think this mix offers a great balance of safety and aggressive upside, just like our 2025 portfolio did. I want to hear from you. Which of these 5 stocks is your favorite? If you want a deep dive into any of these stocks, let me know in the comments below. If you enjoyed this analysis and want to follow the journey to see if we beat the market again, please hit that subscribe button for MoneyJourney. Thanks for watching and I see you next year. This video is for informational purpose only and should not be considered financial advice. Always conduct your own research and consult with a qualified financial advisor before making any investment decision.